Bring that ass back like a boom, 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 boom.
All right, everyone, welcome to Boom Traders. This is Supernova, and we're doing the weekly review for 12th week of this year, last week of March 22. And as usual, we're going to do our session in the following steps. We're going to start with the risk vest model, then tactical trading environment. We're going to talk about the current market conditions, market internals. We're also going to talk a little bit about the Fed rate hikes, and then we're going to do the summary of the market conditions. Now, the first thing that I want to point out is that we had a buy signal on 21st of March. So our signal right now is on positive. We have the general market on positive, the up and down volume and positive as well. New highs, new lows is still negative, but it will take some time for most of the stocks to form setups that can attack the all-time highs. And then we have the stock participation at neutral. Now, there are quite some changes since last week. As we spoke last week, we were skeptical about the rally going on. We thought that we might need some time to rest, cool off, form some consolidations, some pivots, but generally the market just continues straight up. So that, of course, led to us moving some of the components of the risk vest model to positive. Now, the other thing I want to mention is the signal for our tactical trading environment still remains at yellow, which means that the market is highly rotational. Now it's the time for the market to show us who the new leaders will be. So we're still keeping it on yellow. You can trade, but of course, exercise caution. The market has bounced really hard off those lower levels, so we definitely need some time to cool off. And as we go through the indices, I'll show you guys what we're looking for and what we need to see. As usual, when we're doing the current market, we go over the major indexes: gold, crypto, oil, bonds, market internals, and vehicle rate hikes is a new one. I just wanted to give you guys some information and some statistics about how rate hikes affect the market conditions and market going forward. You might actually be surprised to see what I'm going to show you. Then we're going to do the customary top and bottom in industry groups, sentiment, and then we're going to finish off with the summary. So without further ado, let's go into the indexes. So without further ado, let's start with indices, and as usual, we're going to look at the S&P 500 first. As we said, the market really rocketed off the bottoms. We had 4 straight days right here, those 4 bars right here with movements more than 1%. This hasn't been done for quite some time in the S&P 500. There was some movement around the 50 and the 200-day moving average. The 51 is the yellow one, the 200 days the purple one. There was some moving around, and we were able to break this tight range here of those 3 bars around the 200-day moving average on Friday. Now, bear in mind, volume subsided really, so we are definitely going slower pace right now. This might be showing some exhaustion from the market and needs some rest. Now, one thing that I want you to see right here is this gap that remained unfilled on both attempts. This rally up and then this rally down, it remained unfilled, so this is a void area, but we're definitely going to see some support and some resistance being from the groups that were left behind on those 2 gaps up, or the groups that are trying to push the market down. So expect some stalling here. I'm actually thinking that this might be a temporary top for the market. Whereas some other analysts are actually thinking that this might be just another step and we're moving forward. I'm not so positive yet, but as you saw in our Boom portfolio, we took quite some trades because we had this follow through day right here. This day was actually a follow through day on the S&P 500. I actually marked it down on my Nasdaq chart, and this is the Nasdaq, pretty much the same thing, but the Nasdaq still hasn't reached the 200-day moving average, so this is the obvious point of resistance if we're talking about where we think that Nasdaq could go. and this was the follow through day right here. I marked it with this green arrow. So S&P 500 in a better situation, definitely above the 200-day moving average, but close to um, prior resistance and support zones. QQQ still needs to clear the 200-day moving average here in the purple line. Let's look at the Dow Jones Industrial, and I still have my drawings. Dow Jones Industrial, let me just remove most of them so you can see it a little bit clearer here. Dow Jones still needs to clear the 200-day moving average. So basically, this is where we at resistance right now. And if we look at IWM, now IWM was the top performer for quite some time for the indices during this drawback, but for now it seems that it's stuck in this range. It got rejected at the high level right here, 209. Got rejected. This line has been serving as support for quite some time for this more than 1 year base building, but right now it's serving as resistance, and you see it was tagged once. Tagged almost to the penny here early this week, and we got rejected, and now we're stuck between this resistance zone and the 50-day moving average. We are sort of forming a tight handle if you consider this formation right here to be a base. If this could stay above the 50-day moving average, tighten up a little bit, and we might see some explosion. As you can see right now, volume is subsiding, so this might lead to explosion to the upside, but we still need to build a little bit more here on the right side. So basically, this is the indexes. Definitely S&P 500 looking the strongest of all three, with arguably IWM and QQQ looking worse than Dow Jones Industrial. So looking at some key commodities, gold being one of the most important ones, it did break out of this base as we were talking about it last week, but it formed an exhaustion move to the upside on this huge volume right here. Consecutively, it just went down, but the good news is that it was able to hold this breakout level right here. Not a single close, as you can see here on the right side. Let me just draw this. Line right. So as you can see right here on the right side, not a single close below this breakout zone. So we're in good shape for a move up. Now, the move that we saw on Friday wasn't so convincing. We had like an indecision candle right here, so it's up to see next week. It's a very important week to see whether this can break out to the upside or it will fall back for an orderly pullback to this breakout line. Things are not looking so bright for silver. Silver tried to hold this breakout line again, exhaustion move to the upside. It did actually record a close right about here and another close on Friday right about this zone, but the wicks on both sides of the candles, like on the upside of the candle right here, and on the lower side of the candle right here and right here are showing some indecision in that matter. So the verdict is still out there. Now let's look at USO, which is basically a fund that is tracking the movement of crude oil. As I said last week, I'm looking for a move to the downside. Now this week was met with a gap up on Monday, then an indecision day, another gap up on Wednesday, and then we've been going down since Wednesday. As I said, most likely scenario for oil is to go down with tensions easing between Russia and Ukraine. Now we haven't seen those tensions actually easing, so we're still at elevated levels when it comes to oil and natural gas, but I'm a firm believer that we will see oil coming down, and it's the verdict is out there. As I said, it's still up to see when will this happen, but I know that this situation is no win zone for pretty much all the parties involved. So definitely I'm looking for oil to come down. Now let's look at crypto, because crypto has been the star of the show right now. Ethereum moving past 3,000, strong volume. As you can see, like last 2 weeks we had only 2 negative bars. We moved above 3,000 pretty much without any hesitation. Now we are at some resistance zone, as you can see right here, downward trending resistance line. We broke that, and now we're hitting the highs right here about 3,200. Next obvious level of resistance, definitely these zones around 3,800, and then 4,000, as you can see here on the chart. Now let's move to Bitcoin. Bitcoin moved past 40,000. BTC, Bitcoin moved past 40,000 last week, and we're just going to use this one. So Bitcoin moved past 40,000, as I said, and this is the third time I'm repeating this, but this is an important movement. As you can see, we're close to the obvious resistance, 45,000, and then moving to the next round number of 50,000, with these weeks right here being the zone when we need to break. From there on, we have another resistance zone at 60,000, and then we are ready to attack the tops. One thing I want you to notice here is first the absolutely bullish volume in Bitcoin for last week, but also since Bitcoin and crypto in general has been acting pretty much in sync with what the Nasdaq has been doing for the last couple of months. When Nasdaq was going down, crypto has actually performed rather steadily. And if you remember, we saw the chart of the Nasdaq a little bit earlier. So if you look at crypto starting from 2022, you can see that this is like one big consolidation area. Now let me just flip back to the chart of QQQ, and you can see that from the beginning of 2022, so basically this zone right here, let me see if I can draw it without the snapping tool. So basically this zone right here, you can see that we have recorded a substantial drop, something that we have not seen in crypto. So crypto is definitely acting much better than its counterpart in Nasdaq and the stocks that are in traded in the QQQ. So I am a firm believer that crypto has a lot of upside potential, and we are about to see this once the market resolves itself and all the issues accompanied it. And the other thing that is really important about crypto is the United States and President Biden's executive order basically stating that the United States wants to be the hub of this new development, wants to nurture crypto and work with it. Which is definitely a positive development for the crypto community in general. So saying that, we're going to move to the next section of our weekly market review, and then we're going to take a little break and make a second video, because I don't want you guys to be bored by all this talk and charts and stuff like that. So let's start with the next part of this market overview, and then we're going to take a break. So let's talk about the market in terms a little bit, and the first thing that we usually start with, as you know, is the advanced decline lines. Now let's first look at the S&P 500. Right here from the bottom, we had a huge thrust up in the advanced decline, and basically we were able to clear the previous thrust up from this reaction right here. So basically what we're looking at is these highs with these highs, and then now we're having higher high in the advanced decline line reading, which is confirming higher price in the S&P 500. Now we're still lower in terms of price from these two levels right here at around 460. Same thing here with the advanced decline line. So pretty much everything is in sync right here. And as I said earlier in the video, S&P 500 definitely the strongest of the sectors. Now looking at QQQ, we have some situation right here when the price, as you can see, has rallied right here, has rallied above those levels prior in March, but the advanced decline line is pretty much at the same level. So this is not looking so positive for the Nasdaq, and it's up to see whether we can have another leg up here, thrust to at least get to the same advanced decline line reading as we had here in the 370 highs. So not so positive for the QQQ, although we might again see a move up to the 200-day moving average for the QQQs, but we need some response from the stocks trading in the index as well. Dow Jones, as you can see right here, huge thrust from the bottoms in the advanced decline line, and we're definitely moving in sync right here. So everything is okay. And IWM, last but not least, as I said, it was looking stronger now, but not so much anymore. You can see we are forming some consolidation right here in the advanced decline line as well as price, but the advanced decline line this time is much lower than the levels right here. So basically, if we draw some horizontal lines of support and resistance, you can see this zone right here when we had the last test, which was 209, the last test. As you can see, price tested 209 level, advanced decline line tested the 20,727, and right now we are about 2,000 points on the advanced decline line lower, although price is about the same here. So this definitely has some divergence with the advanced decline line, and I'm thinking that we might see some weakness in IWM going further on. Next, the put-call ratio has starting to go down, and this is generally a normal situation where we're talking about market advancing. However, I would like to see the put-call ratio stop right around here at the level it is currently at. And the reason being, remember when we spoke about how the put-call ratio has performed for the last 2 years, this relentless market rally ever since the COVID crash, which was right around here. So the put-call ratio dropped to about the 0.5 level, and this has been sort of support zone at the bottom, and 0.75 has been a resistance zone on the top. I commented that previously, prior to COVID, you can see most of the time the put-call ratio has been bottoming at 0.75 with the upper range being around 1. So I would reckon that this is more like the normal state of the market, and COVID situation right here with 0.5 and 0.75 range being some sort of an exception. So in order to get back into normal market condition, normal market health in terms of put-call ratio, of course, I would like to see the put-call ratio hold right here at about 0.75. Now looking at the moving averages indicator that I used, it's starting to level off right here in the 10-day moving averages and the 20-day moving average. So the stocks above their respected 10-day and 20-day are 67% of all stocks in the United States are trading above their 10-day moving average, and 65% are trading above their 20-day moving average. The 50-day still continues to rise as the 200-day, so 31% of stocks are trading above their 200-day moving average. Now, what is really important right here is to notice how the 10-day and the 20-day are playing this through. What I would like to see here is that the 10-day touches right here, the 20-day maybe cuts it a little bit to the downside, but then moves up again. So basically we're forming some sort of consolidation between those two readings here. And as you can see here, stochastics is dropping, but I would like it to hold the previous levels of around, what we have right here, around 62, 63. So if we can hold this and move up to the upside again with those two lines making another run to the upside, we might actually get the 50 and the 200-day into much healthier conditions than they are right now. One more thing to look at is the VIX, and as you can see right here, VIX is quite extended to the downside, basically breaking the lower band of the Bollinger Bands, and we might be actually seeing some pullback to the mean, reversion to the mean, so that would definitely coincide with the consolidation areas that we're seeing in the market, and we are thinking we might need to see in order for a healthy advance to the upside. Now this line right here is at 1995. Right now we have the VIX reading of 2081, which is a good reading, but also let's take a look at the S&P 500 on the upper part of the chart. As you can see, S&P 500 is moving basically through the Bollinger Band's upper band. So this is like 2 standard deviations above normal price action. And we, as I said, we might need to see some consolidation, especially given the fact that we are getting closer to 457, which is the next obvious resistance zone. Now that we are over 50-day and 200-day moving average on the S&P 500. So, as I said, very important week. Expect some pullback or at least some sort of healthy consolidation. We really don't want to see this market going straight up without stopping anywhere, because as you probably already know from my videos, a situation where prices go up easily means that the price can go down easily. So we definitely need to build some constructive environment for the stock market to go up, and that will definitely require some consolidation and some stopping of the current rally.